Hey, welcome back to Harvesting Income. In today's video, I'm going to talk about an interesting covered call ETF, which is named GIAX, which is GIAX. And this is also known as the Nicholas Global Equity and Income ETF. Um, Let me give you a quick summary of the main goal of the fund. This is basically an actively managed exchange traded fund, and it seeks to generate current income plus also capital appreciation. Okay, so the fund's main portfolio, actually, our strategy includes two components: holding shares of unaffiliated passive managed ETFs that seek to provide exposure to a range of global equity securities, and selling daily index credit call spreads or on one or more of the equity indices. Okay, one part of the strategy I can explain or understand. The other part I understand, but it's difficult to explain in this video. The first part is pretty clear. They have, passively managed exchange traded fund, providing exposure to different global equities. The second part, this could be a little technical, selling index credit spreads, call spreads basically, on one or more of the US equity indices. Let me go further down to see what are the features. Okay, here this says the fund will select will sell credit spreads or one or more of the global indices to generate income from the options premium. Okay, long story short, the second part of the strategy is about selling credit call spreads, and that's what the fund is doing. And even I don't know the fine print or the details of the same. So it says it will focus on option expiration with 1 month or less, which is pretty good. These short-term options are pretty profitable, like as far as I have experienced, and especially 1 month or less is even more attractive. And funds have the ability to find profitable opportunities. So this the basic feature and strategy is wonderful, and the main objective is to generate income, and the secondary objective is to seek capital appreciation or follow the index or different indices. I would say this fund is actually a kind of a bundle of different ETFs and stocks put together. I will show you in the other page the holdings and other details of the fund. Um, just bear with me for a moment. Okay, I go to the holdings section. So after we see the holdings, we'll quickly go through the dividends and capital appreciation, and then I'll share my thoughts about it. So please stay tuned, to know more about this. Uh, there are about 30 holdings, different companies and ETFs. Top 10 comprises about 76.8% of the overall portfolio. Total assets about 67.5 million roughly. Okay, when I look at the holdings, the first few holdings, like, it gives me a quick idea that a majority of them is mostly sectoral ETFs. For example, Vanguard Information Technology, Vanguard Mid Cap Growth. This is a mid cap index ETF, and Vanguard S&P 500 ETF. So this is based on the S&P 500. So, and again, you have Vanguard Dividend Appreciation ETF, 8.34%. So the first four Vanguard funds seem to be, comprising about 40, 41, 49, almost like 48, 49% of the total portfolio, almost half of the portfolio. And if you look at the other holdings, like, let me go to 5, 6, 7, 8, 9, 10. Nvidia, this is individual stock. iShares MSCI India ETF. This is a country ETF. Um, Basically, the index of India is being invested into, and here they are investing into the emerging markets, Freedom 100 emerging markets, about 4%. And this is VanEck Israel. This is also about 4%. And this is Global X Defense Tech ETF. It's focused more on the defense sector, 3.77%. And you have Palantir individual stock, 3.55, and MSCI Argentina, around 3.5%. Aiden, I'm not that familiar with this company. Probably it's a European firm. If you know more about this, please share your comments or thoughts on this company. And you have the Taiwan Semiconductor Manufacturing. Yeah, it's a hot sector now. And Microsoft Corporation, Tesla, Meta, all these big seven names. And you have different country ETFs again, and so on. And you also have the government securities. So it's a good combination of index ETFs for different countries or different geographies, different sectors, and even the mid cap, small cap, mostly the mid cap and large cap, not the small cap. So basically, they are focusing on the blue chips and the broad indexes, and a little bit of the mid cap, emerging markets, different countries, and different sectors put together, and different sectors which are very popular or have potential for a high amount of growth in the future. So all that is being packaged into one ETF. So you get everything in one. Like you get different nations, different sectors, different countries, and also the overall US market, mid cap, large cap. It's almost like everything put in one bundle or a one package, one combo package that you can invest into. Um, no financial advice. I'm not telling anybody to invest in just one fund. You should always diversify. Even if you have one fund which covers the entire world, you still need to diversify across different funds and across different assets. That's key for any investor to have a kind of risk management in place. If the markets go down or you have a black swan event or any issues, you always have that diversification. Okay, so that's about the holdings. Let's look at the dividends. I will also show my analysis. Pretty attractive. Like dividend yield is about 25%, annual dividend 4.48. Looks pretty attractive. And every month I can see the fund was launched back in July 2024. It's hardly 1 year. The fund now has a history that we can look into. 1 year history. Like when I look at the dividends, it's about 40 cents in the initial 2 months, 2 or 3 months. Like if you come down further, it's slightly reduced up to February 2025. It's okay, not much reduction. But after that, March and April, where months where dividends or distributions were cut a little bit. I mean, reduced, I would say, not cut. The distributions got reduced to 34, 33 cents. And later on, it got gradually picked up again. Probably it'll reach 36, 37, or probably remain in the 35, 36 range for a few months. I don't know. Let me share my analysis of the dividends. I looked at the price. Current price is 1791. This is as of August 13. 1 year ago, the price of the fund was 1971. So basically, the fund has fallen in value. Like the fund lost 9.1%. So in terms of the capital appreciation, like the fund lost money, but dividends are pretty attractive. Like I have calculated the current dividend yield, which is 25%, which matches with the other, with the or the other website stock analysis. Now, if I look at the current price and calculate the dividend yield, like the trailing 12 months dividend, like I put in all the dividends here. So when I add up all the dividends, it's about 4.48, $4.48. And if I divide that by the current price, it's about 25% yield, which is super attractive. And you're almost getting a double digit yield, like about 20%, 25, and almost like 2% a month, which is super attractive. And of course, the dividend is variable, it can go down and it may not be sustainable. So it's not a financial advice. Please bear that in mind. And coming back to the calculation here, like I also calculated the dividend yield, assuming that you held the fund from 1 year ago. Imagine you held the fund at 1971 1 year ago, and you're still holding on to it. So based on the 1971, $19.71, if you earned 4.48%, sorry, $4.48 of dividends, the total dividend, the yield comes to 22.7%. So in terms of the dividend yield, you made 22.7, capital appreciation minus 9.1. So total return is 13.6, assuming you bought the fund 1 year ago. So it's not super attractive because you are seeing a bit of capital appreciation. Sorry, capital appreciation, which is eroding, like basically capital erosion, which is actually bringing down the yield or the total return to 13.6%. So which will again be almost like equal to other covered call ETFs, which are providing like 12% or 14% yields. So it's more or less in that range. So we have seen the performance, we have seen how this works. Now, how good or bad the fund is, that's one thing. You will see a capital appreciation, reduction or erosion sometimes when the markets fall. Like, it's not as if the fund has done something wrong or anything went bad. You will find these kind of capital erosion in covered call ETFs. For me, I would say that if it is a 5 to 10% erosion, that is something I can live with, like maximum 10%. But if it is beyond that, it's going to bother me, too much, because I feel like I am losing value, even though I'm getting the dividends and even though I'm seeing the fund is doing okay. If I see the value coming down over time, it seems like my investment value is actually, coming down and collapsing over time. And if it's going to happen over a couple of years on a steady basis, it's pretty concerning. However, like if it's less than 10%, like this one is like 9.1%, I don't see it as a major issue. And since the fund is performing well and giving dividend yields of so much, I don't see that as an issue. The one thing I want to check back is what is the uh, expense ratio. The expense ratio of the fund is about 0.93. It's a pretty expensive because it's an actively managed fund. So obviously that's something to keep in mind. You will have to be okay with that level of expense. It's not like any index ETF where you have like 3 basis points or 4 basis points of expense. It's going to be a little high because of the active nature of the fund. Now going back to my sheet, what I would conclude here is this fund is going to give you these 20 to 25% returns for some time. I don't know how long, and I don't know whether it's sustainable or not. I wish I had a crystal ball, but I don't know. But based on their performance so far, looking at the consistency of their dividends or distributions, um, I think they will be able to make at least 20% per year. Although it may vary month to month, like overall they can hit the 20% mark. And the one thing I hope the fund achieves is stability of the capital. They're able to stabilize the capital part and stabilize the NAV, then I would think this fund is an excellent option for income investors. For pure income investors, too, this is good. The only thing is that capital appreciation might be a concern that you want to look into. But for investors who are looking for capital appreciation, this fund may not be a good option. However, if you are looking to add this as a very, very small part of your portfolio, just for that little bit of income kicker, that's fine. But if you're a pure growth oriented investor, then you could look into other options. So that would be my observation. For other types of investors who are in the middle, like neither on the income extreme side or nor on the extreme growth side, if you're somewhere in the middle of the pack, this fund is a good option to have as a small part of the portfolio. I wouldn't recommend this as the main one. Some people think that probably this is the all-in-one fund and a basket of the entire world, different indices, different stocks, different countries, everything put together, achieving geographical, sectoral, and all types of diversification. That is true to some extent. However, I always recommend that you should go beyond one fund house and look at different funds and different asset classes. That's very important. Not just investing in one basket which covers everything, but you need to look at different asset classes too. So having said that, I hope you like this video. I hope you like this presentation of this fund. And in future, I'm going to do a deep dive on this one. And if you have any questions, comments, feedback, please feel free to drop them below. I would be happy to answer them. And wish you all a great day and happy investing. Thanks a lot.